Welcome back to an exciting green episode of Citi Market Watch. The goal of the series is to give you meaningful updates on the market and how this impacts your investment strategies and portfolios. Great to have Audrey Cheong join us again, Citigold Private Client Portfolio Counselor. Audrey, what exciting green topic are we going to talk about today?
We are going under the bonnet or hood today, and we are going to look at the mechanics of EVs or electric vehicles.
Well, you know, Tesla just launched its Model S Plaid this last week. It does 0 to 60 in under 2 seconds, has a top speed of 200 miles per hour, and has an impressive estimated range of 390 miles. We have come a long way with EVs, but I'm sure that's not what you want to talk about.
Thank you, Sun. Yes, time to get focused. Ultimately, this is all part of our singular quest for net zero carbon emissions for a cleaner, greener, and sustainable world. Transportation accounts for 30% of greenhouse gas emissions, and hence the transition to EVs is a critical milestone in reducing carbon emissions. We are now seeing far more regulatory and corporate alignment in achieving these goals. The US rejoined the Paris Accord, which is a legally binding international treaty to limit global warming to well below 2 or preferably 1.5 degrees Celsius. Aside from Iran, Iraq, and Turkey, this is a global agreement. Currently, China leads and has the most aggressive targets, where it is aiming for 20% EVs by 2025 and 47% by 2030.
Yes, and we are seeing major car manufacturers transition towards EVs. General Motors announced a commitment to produce only zero-emission cars by 2035. Volkswagen expects at least 50 to 70% of sales across Europe, China, and the US to be all electric by 2030. And Toyota expects 40% of sales to be electric by 2025 and rising to 70% by 2030. Currently, only about 2% of total global sales are EVs, and given their growing appeal, as typical barriers like price, charging infrastructure, and range fall, we are likely or are going to see some version of a meteoric rise in EV adoption. The new Model S Plaid mentioned previously is expensive at $130,000 US, but by all other accounts, it is a winner. The point, Audrey, is we are bearing witness to full-scale disruptive innovation in the vehicle space as EVs completely transform the landscape. So don't blink. But what's driving this, Audrey?
Well, the singular differentiator is simply the battery or battery technology. The battery disproportionately determines prices and, of course, with further advances, significantly more range. The Mercedes EQS model, which is scheduled for 2022 release, will have a range of 478 miles or well over 750 kilometers.
We talked about commodities in our last episode and how we are seeing a structural supercycle being driven very much by this green infrastructure revolution. Can you tell us more about batteries, lithium, and any other interesting components?
To be fair to Citi Analysts, there is a lot of information to appreciate, but to be succinct, let's just focus on the winning battery technology and the cost of battery packs. When it comes to energy storage, the prevailing winning technology is lithium-based, and as the chemistry alteration evolves with the use of cobalt, silicon, and nickel, for example, we are seeing energy density increase and performance rise. In Tesla or Nissan terms, the Tesla Model S battery is twice as dense as that of the Nissan Leaf, yet has 3 times the power output or the driving range. Consider these battery performance statistics. In the last 7 years, we have seen the battery range increase from under 100 miles to over 300 miles. Acceleration 0 to 60 miles has dropped from 10 seconds to 4 seconds. And top speed has risen from 90 miles per hour to a comfortable 160 miles per hour. And we continue to see improvements. Sun, your turn. Update us on costs.
Thanks, Audrey. This is all super exciting. Everyone wants more for less. And in the EV space, we are getting value, and value with improving performance and lower prices. In the last 10 years, battery costs have fallen by almost 90% and is forecast to drop another 20 to 30% by 2023. Tesla alone is announcing it can drop it by 56%. This rate of change is phenomenal, and why some analysts, Citi Analysts in particular, believe that EV adoption expectations are too cautious. By 2023, EVs will be far cheaper than normal ICE or internal combustion engines. Currently, total cost analysis over a 3-year horizon has Tesla beating a Toyota Camry. But with the battery cost improvements, the outright sticker price for a Tesla will be cheaper. So just as we have highlighted how renewable energy is an unstoppable trend because we now see wind and solar as far cheaper than traditional fossil fuel sources like natural gas and coal, EVs similarly are breaking out and hitting escape velocity.
It certainly is exciting. When you think that the average vehicle life is about 12 years, and given corporate and government targets to be absolutely net zero by 2050, you will hate to be the last person to buy a gas or petrol-fueled car anytime about 15 years from now. It will be like musical chairs. Whilst now some may still be concerned about charging stations, in time to come, you could be that last Mad Max person looking desperately for a petrol station.
Although battery technology is key and it is driving this transformation, there is enormous investment happening in terms of building battery production capacity globally, in addition to the charging infrastructure. Currently, there are 186 battery cell megafactories globally in development, 140 of which are in China. Yes, China, which I think and hope tells another story in itself. Europe is next in terms of building up more gigafactories. And lastly, we haven't dived into where and how autonomous driving will likely accelerate and deepen this shift to EVs. That's more of a 5G and AI or artificial intelligence story, which we will have to save for next time. Thanks, Audrey. This has been great.
I love talking about sustainability, how technology is transforming and saving our planet. And at the same time, it's a great investment strategy and allocation. Thank you for tuning in for this green episode of Citi Market Watch. Please contact your Citigold or Citigold Private Client Relationship Manager for more opportunities.